What up, Hyperchange? Welcome to another episode. Today we're talking about Square, the payments company founded in 2009 by Jack Dorsey. I think this has the opportunity to become a company that is multiples bigger than where it is today. A ton of you guys have requested me to do an episode on Square, so today let's do it. First, I'm going to walk you guys through, a little bit about the business, what they do, then we'll get into the financials, and eventually what I think about the valuation. So to start, Square is digitizing the back office for a small business. They have this phenomenal slide in their shareholder day meeting where they show all the different processes that go into managing a small business and how many of these still rely on sort of discombobulated systems that rely on paper. Nothing integrates well together. And Square is basically digitizing all of these processes, starting with their point of sale system. I'm sure you've seen it at your favorite cafe or bookstore or supermarket, that cool white register looking device where you can just swipe your card, that easy. That's Square, and that is their main business, is accepting payments. But why I think the company's so fascinating is they're layering on all of these value add services for small businesses on top of that payments business. But first, let's just analyze how big the payments opportunity is. Square today does about 53 billion worth of gross payment volume. That correlates to about 0.6 billion of adjusted payments revenue. Now, to put things in context, for just the US, there's a $3 trillion gross payment volume opportunity and a $26 billion adjusted revenue opportunity. They have penetrated less than 3% of their target market in just the US. Those purple dots are where they are today, just to, put it in context. So just a massive white space opportunity to expand in payments alone. And that is, I think, the most important sort of first takeaway for Square's business. But what's so exciting is they're getting into all of these things that are way, way beyond payments. They have, the 26 billion payments opportunity, a $5 billion opportunity within e-commerce as well, an $8 billion opportunity in software to sell things like payroll, accounting, analytics services. Then they have a $14 billion opportunity for Square Capital, which is a fascinating business where they take all the analytics that they have on the back end for their customers and figure out which would be a good candidate for a loan to expand. And then they'll offer you a loan based on that data they have. So I think they have way more data and insight than a traditional bank would to do, small business financing. And they're getting into that. Then on top of that, you also have Caviar, which is a food delivery service, sort of like Seamless or Grubhub, that integrates with merchants who need to do food delivery. So as you can see, Square is building this really powerful ecosystem of where once you're just accepting payments, then they'll help you do food delivery, then they'll help giving you more money. Not only is it generating more revenue for Square, but it makes it a lot stickier of a service. They're summarizing this as it's a $60 billion commerce ecosystem that they're attacking in the US alone, and that could even be bigger if once they expand to more value add services for these businesses. And globally, the opportunity is even bigger, potentially 6 to 7x as lucrative or as many accounts possible globally for Square. So, Square does operate internationally now, but it's way less than 10% of revenue. It's only a tiny amount of the business, but this just goes to show you how long-term, just how big the scope is that Square is attacking. And PayPal actually just bought a Square competitor to go after Europe. In some ways that does represent a new threat for Square's international expansion. But on the flip side, that's validating how important and how relevant of a business Square is built, and how PayPal wants to get into it. A ton to get excited about here with Square. If we take a look at the company's financials, they have grown revenue consistently for years, 2.2 billion in 2017. Although they're not making money, negative operating income, they're getting much closer to making money. And I will say that they are producing positive free cash flow because a lot of their expenses are non-cash expenses like employee stock. So in terms of financial health situation, the business is in really, really good shape. They have about $1 billion in cash, no debt. They actually are producing a little cash from their core business. So I think that's all good. Revenue is up about 30% in 2017. One of the really important things to understand with Square's financials is their gross margin keeps improving dramatically. Every single year since 2013, we've seen significant improvements. As they hit scale, they're getting higher margins on their payment processing business. This is allowing them to layer on different higher value add services. And this is resulting in a transition where their gross margin continues to climb. That's why if you take a look at their gross profit, it was up 46% in 2017, despite revenue growth of only 30%. Next year, they are guiding for revenue of $3 billion. I estimate a loss of about 30 million. This would be growth of about 37%. So it looks like growth is accelerating. They also have this metric called net revenue, which sort of detracts the cost to do payments. And that net revenue was up about 51% in Q1, way faster than 37% they guided. So a ton of interesting dynamics going on under the hood with Square's financials. If we take a look at their valuation, with 400 million shares outstanding, $55 a share, we're looking at about a $22 billion market cap. That puts the price sales ratio with about $3 billion expected revenue at 7.8 1.3x, which is high, especially given that the gross margin's under 40%. But, this once again goes back to all about the vision you're betting on for the future. If you think Square can continue to grow the revenue at, 30 to 40% for years to come, can continue to improve gross margin, get to profitability, I think this is frankly a really, really cheap business. It's all about the future. When I think about where Square is in 5 to 10 years, I think their payment business is going to continue crushing it, end up being a massive cash cow, and then they're going to have all these value add things like Caviar and Square Capital, which are super high margin that just go right to the bottom line. And I think Square could become an ultra profitable, ultra big business long term. Just barely starting to see the seeds of that now. Weebly, this is an acquisition Square just made about a month or two ago. Weebly is a site that allows you to build your own website. They compete with Wix and Shopify and things like that. I'm a big fan of Weebly, have used it in the past, and I think integrating with Square and Weebly is a massive opportunity that will give Weebly a leg up against Wix, Shopify, all of their competitors, because they can tap into this massive backend that Square has built, and I think that's super, super useful. I have a Square card reader for a t-shirt business that me and my friend have. We built our website on Wix, and then we also have to get Square to accept payments, and so it's just kind of a nightmare integrating all of this. And I think Square buying Weebly is a really smart move into vertical integration, because before now, Square for much of their life has been a hardware, retail company that is all about in-person sales. And I think them purchasing Weebly is a huge shift towards online sales. The last thing that I want to bring up with Square is Jack Dorsey. He is the X factor. I think, having a CEO who has vision, who founded the company, who is executing with as much talent as Jack Dorsey is a huge edge. And I think buying Square today, although the company's not cheap and you're betting on a ton of future growth, you're also getting access to one of the world's best leaders. At the end of the day, Square is only a $22 billion company, which sounds big, but if you think about the massive back-end payments, small business platform they're creating, this is a several $100 billion opportunity. I think if Square executes on their mission, this could have 10x potential in the long term, $220 billion company. Anyway, if you guys have any comments or questions or know any risks that could stop Square from executing, I'd love to know. Leave them in the comments below. If you like Hyperchange and you want to support, please check out our Patreon page for more info on that. Anyway, I'll see you guys next time. Peace.